How is everybody doing today? Good?
Doing great.
Good.
How are you?
I'm doing fantastic.
I got me a new driver, Troy.
Did you really? You didn't need one.
I did.
You hit your other one good.
Well, that was a demo.
Oh, it was?
Yeah, so I went ahead and bought it. Yeah, that tailor-made M1.
Yeah?
Yeah.
Is that the same one you were using?
Yes.
Okay. I thought you hit that really well.
Well, that's the reason I bought it. Because I was hitting it pretty well.
Yeah. No kidding.
But yeah, the one I was playing with was just a demo from Golf Galaxy.
Oh, I got you. Awesome. I love that course. That's a great course.
Nice, isn't it?
Yeah. Yeah, you're pretty fortunate to have a good course like that, you know?
Yeah. Yesterday morning with the Men's Golf Association, we played it, and I did. I just thought, man, I tell you, I am so fortunate to have this place to be so close.
Yeah. Yeah, no kidding. So, all right, let me check the time. All right, so it looks like we have several folks on here. Okay. And we have quite a few people online, too. So, okay. Well, let's go ahead and get started real quick. I got 201 by my phone here, so let's start. So, okay, the very first thing I want to mention is that, and I don't think Charlie's on the call, although Charlie Wilson, you on the call? I don't think he is. Anyways, so Charlie calls me this week, and Charlie has always sent out acquisition letters, or he sent them out I think once or twice, and he basically said, yeah, you know, it just doesn't work. Well, the funny thing is, so 3 years ago he sent these letters out, and he had somebody call him last week, and this guy's ready to move, wants to sell him basically a $100,000 book of business, you know, fair price, you know, the whole deal. So, kind of interesting. If many of you probably know that I tell you when you send those letters out that people do keep them, and you know, I mean, sure enough, I mean that's what's happened here. So, you know, I mean, don't forget, you know, the potential of acquisitions, because they're out there. It's just a matter of uncovering them and finding them. The other thing is, you know, when we talk about our services, I've been talking to several people at our state society, and they were asking me about just the different practices that we talk to, and then, you know, the different practices that people have around the state. And some people, you know, they focus on tax, or they focus on accounting, or audits, or pension plan audits, et cetera, et cetera. And the one thing I told them is I said, from what I can tell you, just from my experience, is that typically the firms, and actually I had a guy actually call me, it's really funny, about an hour before this call, typically firms that only focus on one area. So for instance, like, you know, there's one that does just pension plan audits. They really don't do as well. And people think, oh, you know, you got to have a niche. But let me explain this. Every year, if I'm a farmer in Indiana, and I'm just going to make this really simple, and I have a lot of acreage, I plant corn across, you know, 100 acres. I plant beans across 100 acres, and every once in a while, you know, I'll double up on winter wheat or, you know, something like that. Well, why don't I plant all corn? You know, well, the reason is because what if corn prices do poorly, or what if there's some kind of, you know, blight or some kind of, you know, disease that impacts corn, and I planted all corn. You know, there's no, I mean, the diversification in your practice, I think, is important, just as it is to a farmer to have, you know, corn, beans, and wheat, or watermelons, tomatoes, whatever. You know, so I mean, I think it's important to make sure that, you know, we diversify in our practice, and really the ways that we can diversify in our practice is obviously we have individual tax returns, we have corporate returns here in our state, we have property tax returns, maybe we do compilations and reviews, et cetera, et cetera. But even beyond that, And again, I mean, this is not, touting, like our valuation services, but, consulting. What type of consulting are you doing for your clients? I think, whether it be helping your clients prepare budgets for the next year or forecast for the next year, that's something that all of you can do. If you have a client that's in a certain industry, email me and I'll get you all the information of what clients in that quartile, based on size, what they're doing, what they're spending money on, what their margins are, et cetera, et cetera. I'm happy to give that to you, no cost, and then you can consult with your clients. We have those databases anyways. We spend like $10,000 a year on valuation databases. I'm happy to provide that information so you can do additional consulting. And the reason I'm bringing that up is because here we are at the end of the year again in November, and a lot of times people don't even see their clients until really year end. Although clients have typically a bit more time, and so now might be the time to reach out to them. And even if you're going to do it, for free or some kind of low fee or something, it keeps that client in front of you. And that's what I'm talking about, just in terms of the diversification. It'd be no different than if I just had a complete 100% individual tax practice. What if they change some of the rules next year to where people under $50,000 don't need to file? I mean, who knows? I don't know. I know that's not going to happen, but something like that. Think of it this way. How about all the insurance folks who only sold health insurance? I mean, I know for a fact that a lot of those people really had it pretty tough when the Affordable Care Act came out, because everybody could just shop it online and you didn't have to go through your health insurance agent. So it's just kind of what I'm thinking of in terms of that. And it just got me thinking about it more and more as I was talking to these folks at the CPA Society. So I think that's something that, we all ought to take a look at. And again, whether that be, the investments, valuations, consulting, budgeting, forecasting, tax return preparation, corporate. If you do corporate returns and they're S corps, use our tax worksheet that's out on the vault to sit down with your client and talk to them about tax planning. I mean, just different things like that. Anybody have any questions on that? I know I rattled that off pretty quick, but no? Okay. All right. Is everybody still there? Yeah.
Yes.
Okay. All right. You never know. I could have put people to sleep. It'd be a new record. So, okay. So that's one thing. The other thing is that for those of you who are in the investment side of the business, which it looks like I think a lot of you it looks like there's 11 people on the call today. So, and I think a couple of them aren't coming up, so I can't tell who they are. But there's 9 of you that are in investments that are on the call. The other thing that I think I would probably send a letter to everybody, and even if it's today or tomorrow, I just send out a quick letter or email saying, hey, with the upcoming election, it's very possible, regardless of who wins, that the market sells off initially. And the reason is because it just like when Obama was elected last time, he won by nearly 5% over Romney, and the market sold off for 7 straight sessions. I think it was 7 straight. And the reason it did is it's not because the wrong person won. I mean, I guess in the eyes of Wall Street, is because they felt like Obama may have had too much power because he won by 5%. But then once people stopped and reflected on it a bit and came to their senses and saw that the Senate and House both went to the Republicans, then that mood changed, and the ensuing market actually moved forward quite a bit from that 2012 period of time. I really think this is going to be no different. From what I can tell, it looks to me like the Republicans are going to keep the House, Democrats are going to take the executive branch, and Republicans are going to take the Senate. The thing that probably worries me the most, and this is coming, and as most of you guys know me, I'm pretty conservative, so you probably know kind of where I fall. However, I will tell you this, that anytime one party is completely in charge of all three branches, or the legislative branch and at least the executive branch, I would say that's a problem. I mean, these boneheads have no clue what they're doing, and nor that should they be making too many changes. Argue what you will, but I mean that's really how we have the Affordable Care Act, and quite frankly, it does. I mean, coming from somebody who's on it, I mean it doesn't work that well. So, I think there's pros to it and there's cons to it, but I at the same time, I don't want the Republicans having a blank check either, and that's just my personal opinion. That's not politics talking. That's talking from the standpoint that it usually does not bode well for the market when one party has all the power. So, okay. I mean, take a look at Russia, for example. Clearly they can't figure it out over there. So, and they have one party in power. Anyways, so there's my political musings for you guys today. But I think I would reach out to my clients and I would tell them to expect some volatility. I don't think it's a good time to sell off. I think whenever you do that, you have to be right twice. And I think that's frankly, if I'm wrong, the market moves higher before it moves lower. The market moves lower before it moves higher. Who knows? At the end of the day, I think looking down the road 5 to 7 years from now, the market's going to be higher than where it is today. We don't have the same calamity that we had in 07, 08, 09, and maybe started in, you could argue in 07, where housing was 21% of the economy and dropped to 4% of the economy. That's not going to happen. First of all, housing is not back to 21% of the economy. Oil prices have never gotten above 6% of the economy. And yes, maybe they've dropped back to about 4.5%, but at the same time, the biggest bubble I see out there is maybe a rise in interest rates. And you might agree with me or disagree with me on that, but I think that's probably the biggest bubble. But that bubble is going to have a tough time bursting, because every time those rates move a bit higher and the economy softens a bit, the rates will move lower as people move back into the safety of the bonds, thus spurring more growth, construction, borrowing, et cetera, et cetera. So I really think that we're probably in this low growth environment for quite some time. The manufacturing index came out, I think, last week. Was that this week or last week? It was pretty solid. I think it was 51.7 or 8. Again, don't quote me on these numbers, but again, it was pretty solid. So I don't see any problem there. It's just, we just don't have we don't have something just looming over us that says this is going to ruin the markets. If by some imagination Trump were to win, even I don't think it would roil the economy. I think he's more talk than he is walk. So and that's coming from a conservative. I think he's full of himself, and he can't stop to look either way because he's too full of himself. So he probably won't get a heck of a lot done. Anyways, okay. That's really what I have for you. I always think it's good to kind of get out ahead of those things with people. Talk to them about it. Talk to them about the market, the volatility that's probably out there. Send your acquisition letters if you haven't already done so. I think that's pretty good. And then think about your practice in terms of diversification. How can you diversify your practice so that you can weather the storm if the economy does soften, which at some point it will. I mean, I don't care who's the president. It will soften at some point. So, does anybody have any questions?
Nope.
No? No? All right. Well, that's what I have for you today, guys. For those of you who are coming in next week, I look forward to seeing you. It looks like we have a pretty good crowd coming in, so I'm excited about that. And if you have any questions in the meantime, don't hesitate to give me a call or email me.
Thanks, Troy.
Okay, guys. Take care.
Bye.
Bye.
The moderator has left the conference.